Hi, this is Matthew Cratter from Trader University. And in this video, I want to talk about the latest bad news to come out of Tesla and exactly how I'm trading it and what sort of price targets we could see at Tesla in the coming 6 months to 24 months. If you enjoy videos on Tesla or you want to learn more about my stock trading strategies or which stocks I'm long and short, I encourage you to hit that subscribe button right now before you forget. Anyway, while Elon Musk has been tweeting about how he wants to nuke Mars in order to make it habitable for human beings, the real thing that's been getting nuked has been Tesla stock, down again today on a day when the market is up and very strong. Number of reasons for this. The two big ones are now Tesla is being sued for another faulty product. Allegedly, their solar panel systems have caught on fire, and Walmart is suing them for this. Now, Walmart doesn't just waste their time suing anybody, so I assume this is I would think that this is a real problem. The other thing coming out is latest analyst news saying that Tesla has been losing market share, electric vehicle market share, to Jaguar and Audi, and that this is going to have an impact on third quarter results. Now, since I made the last video, Tesla's bonds have continued to sell off. They're currently trading as junk bonds. They're trading about 88 cents on the dollar. And what this really means is that bondholders of Tesla debt are expecting to be paid back only 87 or 88 cents on the dollar. They're not expecting to get back their full 100 cents on the dollar. Now, what this suggests is that if indeed these bonds do go unpaid, these bonds don't mature until 2025. But assuming these bonds are not fully paid off at 100, what that implies is that the actual stock, Tesla stock, or the equity in the company is worth zero. So there's this weird disconnect between the stock price and the price of the junk bonds. Now you can see in a year when the S&P is up strongly that Tesla is down about 30% on the year, trading below its 50-day moving average below the 200-day moving average. And as one of my subscribers has pointed out, this chart is very, very similar to the chart of Lehman Brothers, Enron. It's really tracking remarkably, surprisingly closely. Since we last talked about Tesla, Elon Musk, this news came out that last fall, Elon Musk got a cease and desist order. He was claiming that the Tesla Model 3 was the safest car on earth, got a cease and desist order. And this is just another insight sort of into his character and the sort of shenanigans that he's up to. And then I wanted to bring you guys attention to an article that another YouTube commentator pointed out to me. This concerns the Gigafactory, which is the big Gigafactory 3, which is the big factory that Tesla is building in China. Now, in the latest 10Q from July 29th, we had some very interesting news come out in terms of what exactly Tesla and Musk are promising China in order to build this factory there. And it's pretty bad. Basically, they are promising to invest $2 billion in this Chinese factory. And then beginning 2023, Tesla is promising to pay China $320 million a year in annual tax revenue, whether they are making money or not. So this is quite shocking. And if Tesla is not able to do this, the factory and the land revert to China. Basically, that $2 billion invested would completely disappear. Now, these are the kind of things that are in the footnotes. The closer you look into Tesla, the more disturbing things you see. So then the question becomes, obviously the stock is down quite a bit. It's become the most profitable short bet in the U.S., which, if you've been following these videos since January or February, you've been sort of following along with this. I still get a lot of questions about how low could this go. Well, right now Tesla is being priced as a tech company. In fact, they are an auto manufacturer. It's a very capital-intensive business, which is why they have to constantly raise money. It's also a very cyclical business. So with the yield curve inverting, with all this talk of recession, that could be the sort of the nail in Tesla's coffin. But what happens if we don't get a recession and we just sort of get a price reversion, a repricing of the valuation of Tesla? Well, in order to do this, I wanted to take a look at the way the market prices a couple well-known auto manufacturers. GM, General Motors, currently trades at a price-to-book ratio. So you basically take the market cap of the stock divided by the book value of the stock. It trades at a price to book or P to B ratio 1.22. Ford trades at a price to book ratio of 1.02. BMW price to book ratio even less than 0.71. Now let's look at the price to book ratio on Tesla. Tesla trades at a price to book ratio of 6.91. So clearly being valued still as a tech company with some optionality from Musk's genius. But what happens, the market is continuing to lose faith in Musk. That's one reason the stock has been massively underperforming this year. It's another reason the bonds are trading as junk. So what happens if we get a re-rating in this valuation and it goes down? We're not even going to say it's going to go down and trade at 1.2 times book value as GM and Ford are. Let's just say it goes down to two times book. So the current book value per share of Tesla, if we just go to Yahoo Finance here, as of the most recent quarter, it was 31.91. So let's call it $32 book value per share. Now, if Tesla were to be valued as an auto company without all the crazy Musk premium, let's say you valued it 2 times book. That would value it at 2 times $32 a share or $64 a share. That would be a completely reasonable valuation for this company as an auto manufacturer. Now, it's currently trading at 221. Big downside, this is one reason that this company has such a large short interest. If we go down here and look at the short as a percentage of float, almost 30%, 29% of the float shares are sold short. And so I think this is this is a company that there's just so many headwinds, so many things can take it down. More lawsuits, Musk doing something crazy again, a re-rating in the valuation, a recession, a lot more cars catching fire. There's so many ways to win on this. And so I am positioned, I still am long this bear put spread. I am long the June 2021 puts with strike price of 200. Those cost currently trade about $49.20. And then to fund that position, I'm short the 75 puts, the Jan 2021 75 puts. Those provide a credit of about $7 today. This is roughly where I entered. I think I'm up maybe 50 cents on this. But this is basically a bear put spread, and it will have its maximum profit if Tesla trades down to 75. That's sort of where the max profit on this is. These would be worth basically the difference in the strike price, which is 200 minus 75. So these would be worth $125 per put spread. They're currently trading at about 42. So really nice upside on this. A trade that a lot of people are doing as well, I may put on, is the Jan 2021 50 strike puts. Currently bid at 375, offered at 410. So let's say you can get these for about $4 per put. If Tesla were to go to zero, these would go from being valued at about 4 to being valued at 50. If Tesla goes to $20 a share, they would be valued at about 30. So those are two different ways to play it. I think this is a train wreck. You can see how badly it's underperforming, even in a strong market. If we get a bear market or any sort of recession, or even any more sort of incremental lawsuits, Tesla really is history. And I think it's very important, if you're an equity holder, to pay good attention to where these bonds are trading. Again, Tesla's debt is trading as a junk bond, with the implication that these will never be paid off at par value. Hope you found this useful. Please hit that subscribe button. Let me know your comments in the comment section below. Thanks again.